Welcome to TradeTheMBI.com. This is John. This is part 4 of our ongoing tutorial on the extreme histogram and how you can take advantage of that when you see this chart with the histogram readings. In our last discussion, we had been going over movements to the extreme on the histogram, price targets that can be established from those. But I want to get into a little bit more depth as we begin to notice anomalies, divergences, very powerful because they give us opportunities to take advantage of short swings in the market, as well as being able to see broader trends. And in this particular line drawing here, we have a trend of price moving straight lower along with the histogram declining, and then we reach a point where we're making new lows, but the histogram has abruptly moved higher and gone above the red line. And we're able to follow trends like that as they proceed. And if you've missed this up run, not to worry, because you have very specific ideas of where a trend like this may end. And in this particular case, the histogram rose so rapidly that it achieved what I want to call a danger zone. And that danger zone is particularly when the histogram readings reach from about -12 to the positive level. And while the -12 area is not necessarily a reversal, it's often a point of inflection where you're about to see a topping in price and a shift in the histogram to roll over. And it's an indication that the players who've moved the market in a dramatic way are selling into rising price. And it becomes very clear when you start to see these divergences where we've moved positive on the histogram, so we know this low down here is going to be retested. And that level is, well, particularly in the 1344 range. And price comes across at 1360 and you make a lower histogram reading. And that really is a signal right there that it's time to be really preparing yourself either by shorting and or buying a put, either direction. And in this particular case, you know you have a very short-term move of at least 20 points from that 1360 level to the 1344. And in fact, it takes out that level completely and then makes a histogram move below the red line, meaning that even that low has to be retraced. So your next rise move is going to be another opportunity to short. And sure enough, that one happens actually much quicker. And you can see then we have a slide down. In consolidation, you'll get a little bit of sketchy movement, and that typically ranges between the -20 to -50 point. I usually look for bullish divergences on tips below the 50 that end up not making it down below the red line. And you can see right there, this is exactly one of those setups where that range between the two gives you a little bit more of the nuance that otherwise you might not have recognized, because very unique in the way it sets up with how buyers and that are influenced and how much money they start applying to the trade that causes the reversal. But nonetheless, as price moves across, we still have specific targets. We had that 1249 that still needed a retest, and even much further down. So from this 1360, we were looking at moving down into the 1170 range, and even a little bit below that, based on previous dips below the red line that had not been retested. And it shows that over a longer period of time, you can draw much broader histogram views from a weekly chart, and we'll probably get into that in another YouTube video. As I continue to scroll across here, you'll see as the trend deteriorates and we look for those lower lows to be made, and then all of a sudden you get the higher histogram and you have the divergence, and then boom, price begins to trickle back up. Did not quite reach that level here, but you had the low test on a much higher histogram, but it reverts rather quickly, and that leads to another move lower that tests the low. And this can happen in these very extreme one-day moves, where the next day, higher histogram, lower price, perfect for an entry at that particular spot. And you can see that that led to a significant rally. But we have a higher histogram here, which means that right at particularly at this level, 1307 range, we're looking for a retrace to happen, and there it happens very quickly. And otherwise people wouldn't be suspecting of these kinds of moves, and it shows you how the large players are positioning themselves, particularly after a drop like this. They usually want to pump price up to either if they were mispositioned. In this particular case, you had some very bullish setups that failed, and they usually want to get out at even plus prices, and then they set up a whole other series that's going to take you back down to the additional lows. Now in this breakdown here, we can see that immediately on the first move you're already below the red line, and therefore any pops are just opportunities to short into as this decline continues. And this was a rather extreme move because I think there was about 3% of moves that have 6 or 7 bars below the red line at any one time. So this became rather pervasive in the decline, and you can see that we end up touching that magenta target that we had from way back, and then exceed it. And there's a secondary target down here at the 1091 level that this move did not quite reach. I can go ahead and pause the video real quick, and I will show you how far back that indication goes. So through the magic of pause, I've taken us all the way back in time to 9/3 of 2010, a positive histogram that never got a retrace, and actually that low is actually 1093. Let's slide that up there just a fraction so that we get an accurate move, and then we can just slide all the way back forward to the current move where we dipped right below that. There's one additional level down at 1069 that was from a histogram dip that most likely will have to be retested coming forward as well. But here you have one of those situations where we had the declining histogram and now a sharp reversal. Yes, this is an entry at this particular point, and we look for how fast this histogram rises back up to a danger level will give us a depiction on how long we can expect that trend to go for. On our next video, I'll probably give us some additional time frames, meaning a weekly chart, and also the percentage probability that we can gauge from each of these different histogram levels that give us a projection for probabilities of a higher close in the next day, and that can be broken down into a percentage value. So hope that helps you when you're viewing charts and looking at these interesting trend rises and or declines in the extreme histogram. They will provide you some very good opportunities to catch swing trades when you see these either on Twitter or for members who are following on a daily basis. As always though, continue to trade well and look for the continuation of our